Welcome to the Galileo Ventures podcast with myself and
Hugh.
Thanks very much, Hugh. This is our fourth episode. Apologies for it being slightly delayed since our last time we did it. I believe we recorded it a couple of months ago, but we'll talk about why it's been a delay. As a reminder, Galileo Ventures podcast is the place to get your early stage tech news and unfiltered views from two seed VCs, namely us two. And we are also...
News and views.
News and views is our new tagline. Let me know if you like this tagline. And we are on our fourth episode, as I mentioned before, and we're super excited to jump into it. Today, we're going to talk about some local news, some global news. We're going to roast one deck, and we've got one founder question. Because it is technically a public holiday for Hugh, we're going to do a super short episode as well. So we're going to ram through this and get through. It's going to be hot fire questions and answers. But right. Yeah, I'm excited. But first, before we dive into it, over the past 7 weeks, I've visited London, New York, San Francisco, meeting investors, operators, and founders. It's been a bit of a whirlwind trip. I think I met over 30 people officially, unofficially, double that at least. And of course, we met people at the forefront of AI and finance and venture investing. Hugh, I'm going to flip it over to you. What questions do you have for me about the last 7 trips?
How much do you love the degree to which I kept the fund running while you were off gallivanting around internationally? That's my first question. But in serious, I think the question that was on everyone's lips as soon as you arrived back, of course, was how was Burning Man? Those who James had sort of somewhat slipped around the edges of mentioning that one, but of course attended the now infamous Mud Man. How was the experience?
Experience was great. It was extremely muddy. So much less dust than normal, I'm told, but a lot more mud. It was also my first Burning Man experience. So before you piled in on the trope of VCs going to Burning Man, it's my first time.
That's what it is to be a pre-seed investor.
That is correct.
End of fund one.
That's right.
Is when you attend your first Burning Man. I haven't attended one yet, so still in my future.
Exactly. But no, it was really good. It was a fantastic experience, and I recommend everyone to at least try it once if you can manage to get yourself over there.
Did you find, I mean, as a sort of, I guess, event, I'll call it an event for want of a better term, certainly not a conference, did you find that sort of like you noticed that tech skew? Because I think one of the critiques of it has been that it sort of shifted away, I guess, from maybe the art sort of oriented creative element and increasingly into tech over the last, I'd say, 10 years, like not saying very recently. Did you sort of see that tech undercurrent really running through it, or do you find that, the sort of, I guess, the art and the creativity was still at the forefront?
No, the art and creativity is still at the forefront. I didn't meet any tech bros that you constantly hear about. Admittedly, in our camp, we obviously had a lot of engineers, but none of them necessarily in tech. Some of them are doing all sorts of bizarre things. So I think in our area it was very diverse. I was struck by the diversity of people there. But like if you look at the census, they do a census of 40% of attendees this year were Californians. So by nature of them being Californians, a lot of them will be in tech, obviously. And then I think there's the other side, which is it's expensive to go to sort of get all your supplies and be in a desert for a week. So there's a bias towards, obviously,
caravan.
Yeah. Camping.
I'd rather die. I did see all the TikToks of all of the various rental companies like sharing, TikTok walkthroughs of the return vans and the varying quality of to which people had managed to somehow get rid of the dust and or mud.
Correct. Well, I called it the annual U-Haul convention because everyone hires. So in America, there's a brand called U-Haul, which is a very, very famous, rent a truck or storage trailer. And it's just all over America. It's an interesting family-run company, apparently. There's a very interesting background into how it became so big, but it's the dominant player, and so everywhere around, you see that. But no, it was a diverse crowd, very interesting. This year, the art was also incredible, as it usually is. And it's just a pity that it started raining, because once it starts raining, you can't do anything. You got to just sort of stay in your camp.
Okay, so now talking about real topics. Obviously spent some time in the tech ecosystem, really interesting times for that to be the case, both obviously the explosion of AI, the concerns around, the macroeconomic market, everything else. What, I guess, really were the sort of thematics that you think really came out, particularly given that you visited both the US and the UK ecosystems?
So I think the thematics that came out for me were threefold. One, AI is still top of everyone's lips. It is very much permeating itself through every sector. So every single investor is thinking how it applies to the areas that they're interested in. The general mood is very upbeat from an AI investor or just general investor perspective. And in particular, I think what I was trying to work out was where's the puck going in AI? What do we see is going to be on the horizon? And there's a few things that are coming through there, but the main thematic that a lot of investors are sort of investing in right now is trust and safety. And what that means is, there's been a wave of investments in the infrastructure piece. So all of the software that you use to run and train a model. And that's like the things that OpenAI will buy for their engineers. And so that's been done a lot. Now we're looking beyond that, which is how do we ensure reliable outputs that are also, aligned and safe, and the data governance aspect too is becoming a bigger issue. So without going into too much detail into that, trust and safety is a big thematic for big investors. And the other one is around critical technologies as well. So for example, in the UK, they've now got a national mission for AI and for space, where they've got a stated mission. I think in the UK, from memory, it's about 10% of the total global space market they want to own in the UK. And so the government is now investing heavily. There's a lot of funds that have popped up, and it's a bit of a strategic mission. One of the things that was striking for me was like, where is our strategic mission in Australia? Like,
don't we just dig things up out of the ground and sell them to the Chinese?
Yeah, more of that.
It's worked so far for us, right?
This is true.
What worked yesterday will always work tomorrow.
Exactly. Just make it, titanium or lithium. Lithium, that's the word I'm looking for, But no, I think so. So it struck me interestingly that Australia seems to not necessarily have that same national conversation about what that means for us. But equally in the UK, they do. And you could see OpenAI has set up offices there. There's a lot of US investors now over there. And the UK has a big bio and life sector, which is going really well despite the global downturn. So I think that was kind of intriguing to add some color. The other aspect that I thought was really interesting was like if you're doing growth rounds, so your Series A, B plus, it is really tough. It is super tough. So
and I guess like to sort of piggyback off the back of that in the previous comment, like what do you think? What were those vibes like? Like obviously if you were there, as you were a couple of years ago, everything was on the up and up. Nothing could go wrong. There was money everywhere. Like, what do you think, the vibes were really like, and where were the parts that you were maybe surprised by?
So what I was surprised by was was sort of the unknown aspect of what makes a good investment now and what makes a bad investment. Like everyone had their own different views on this. And the best quote I can remember is one of the top investors I spoke with, very, very big investor, very prominent, were like, if you're a company that's doing fine, you're probably not going to raise money. And time and time again, we're seeing this. And I've got lots of stories from this. I've got 4 million ARR. I'm growing consistently year on year. Can I raise a Series B or C? And the answer is no, you can't. Because no one wants to give you the multiples anymore. And if you're unlucky enough to raise in 2021 on very high multiples, good luck trying to raise on that now. And so what's happening right now in the US, at least, much more than over here, is a lot of flat rounds, a lot of existing investors leading these rounds, but then all the other investors are sitting there and going, this is going to go nowhere because we're never going to give them a round they want. And so you've kind of got this weird cohort of businesses that are trying to grow into their valuations, and it's very unclear if they will because it's going to take many years to do that. And so that's what I would call the have-nots. And then you've got the haves, which are on very little amount of ARR, growing very fast for whatever reason, sometimes AI linked, sometimes not. And they're able to raise these crazy rounds, which is what we're seeing in the press sometimes when it's reported. And so I think there's no consensus on what is a good area to invest in right now, but in the US and UK, it's a bit different in terms of what they're interested in. But the general mood is, you need to be very careful about the multiples you're getting on your revenue now because the public markets are obviously not going to reward you just for being a pure software company.
And what were the views, I guess, on, from overseas investors on the Australian market? Obviously they were willing to take a meeting with you, but what was kind of the prevailing, again, I guess, vibes or impression of what the Australian startup and ecosystem really looked like?
The number one impression is, what's Australia?
Fair.
But to be a little bit more positive, the ones that actually a little bit more globally orientated, I think Australia is on the up and up. And so everyone goes, oh, Australia, Atlassian, Canva. Maybe some will then, rattle off a few other billion-dollar companies. But by and large, everyone knows about Canva. Everyone thinks Canva's a great company. Even now, with the global sort of cool down in tech multiples and public markets. So that's very positive for Australia. So that's helping us. What I'm big on now is promoting Australia as a really good destination for international funds to come and invest, even at the early stage. And it is true. It is absolutely true. And so the way to think about it is in the US, there are so many competitors doing the exact same thing. And the valuations at seed and pre-seed are pretty high now. So the bad thing in the US is, founders think it's great to get a 20, 30 mil val at seed. But then how do you follow that up in Series A where no one's going to give you a multiple of 20, 30, 40x multiple, right? So there's a cognitive dissonance happening right now. But now the investors are going, hey, what about Australia? And I guess my pitch is I think Australia is the next Israel insofar that it's going to grow very, very big. We are sort of about half the size, maybe a bit less than 40% of the size of Israel in terms of total venture capital invested on an annual basis right now. So we are definitely getting up there, but I think Australia is going to get a lot more prominent in the next few years, especially if the Canva IPO goes very well.
Very exciting.
Yeah.
Looking forward to seeing how that prediction plays out.
Yeah, me too.
And I guess speaking of IPOs and news, that's a really difficult transition to make. Why don't we talk about the news that's been hitting the world and Australia in the last couple of weeks?
Fantastic. All right. Well, let's go into news. Thanks very much, Hugh, for that mini interview. On to local news. This week, we thought we would dive into something that we announced on our socials, which is we are launching a new program for women in STEM. And we wanted to bring on our own head of platform, Ludi, to have a chat about the program. And so here to introduce it is Ludi. Welcome, Ludi.
Hi, everyone. Thanks, James and Hugh. So I'm super proud to announce that we've launched Jupiter. So Jupiter is a program aimed to support STEM women become effective startup leaders as founders, builders, and operators. So just a quick reminder on what STEM stands for in case you've been living under a rock. That's science, technology, engineering, and maths. So Jupiter was essentially created because we truly believe there is an untapped potential with STEM women as leaders in early stage tech companies. And there simply isn't enough STEM role models, to be honest. So this program really is about giving STEM women the opportunity to enter the playing field in tech on a level ground as their male counterparts with our no BS approach. So this really is for STEM women to harness their strength, for us to provide insights into the startup landscape and connect you with the tech world. So what you can expect in this program, sessions on the 0 to 1 phase of building a startup tech company, learning the art of fundraising, and listening into tech briefings on AI and ML products and any new tech that's happening at the moment. It's also a chance to hear from leading women in STEM who have done this before, executive coaching on how to help you become an effective executive, and all within a supportive peer-to-peer group environment. So that's it.
Great. Thanks, Ludi. Thank you. I have a quick question, which is what are you most excited for about Jupiter?
I'm really excited about having this community of brilliant minds work together and really find a community within this tech ecosystem.
Cool. All right. Thanks. Hugh, do you have a question for Ludi about Jupiter?
Where can people find out more?
Yeah, so if you head to galileo.ventures/Jupiter, there's more information there.
Sweet.
And also
Jupiter
follow
like
us
the
on
planet, not like the Python
like the
notebook,
planet.
just to be clear.
Yeah.
Just in case there are some, STEM-oriented people who would perhaps make that mistake.
Correct. And then Ludi, what are the dates for the first cohort as well?
Yep. So we're currently taking in interest for the Tuesday, November the 7th. So our application deadline is actually at the end of October.
Great. So you got a month to apply. Go to that again, galileo.ventures/Jupiter. I'll put it on the bottom
It'll
there.
be in the show notes.
It'll be in the show notes as well. And if you do join us, Ludi will be there to help with the first cohort and lead it up. And we're super excited to see the first results. If you want to find out more, you can also email us at team@galileo.ventures, and Ludi will get back to you with some details. Thanks very much, Ludi, for joining us, and enjoy the rest of your day.
Thanks, Ludi.
Thanks, guys. See ya.
On to the next story. We are going to talk about two darlings, maybe, of the local tech ecosystem. Recently announced, I think just this week, the ordering apps that you would have used in any pub in Australia these days. That is Me&U and Mr. Yum, the digital ordering apps. Hugh, tell me what's been happening there.
Yeah, so I mean, obviously, been a very competitive market. Launched, I guess, into the stratosphere almost during COVID, but then subsequently, much like a lot of the rest of the market of point of sale systems and everything else into retail and hospitality, been very, very competitive. And of course, the two of them have kind of been both the earlier entrants, but I think also the most well-funded entrants into the market, and we're both, I think, very aggressively pursuing market share across their different domains, different, I guess, both geographies, knowing that Mr. Yum started initially in Melbourne, Me&U initially started in Sydney. But obviously there's, but both national companies, to be clear. And the merger obviously happened just very recently. And so I think, the AFR had some reports on, allegedly how it all sort of, I guess, worked out and panned out. But I guess to ask you the question, James, what do you think? What do you think that means? It's interesting that both of these companies, who both had raised, I think, north of 50 million.
Mr. Yum, just to jump in, Mr. Yum raised 100 million in its short life, including 89 million led by Tiger Global, which I met with in New York and got their view on a lot of things. And I can tell you some of their views about Australian unicorns was very interesting. We didn't talk about Mr. Yum, just to be clear, but we did talk about some of the others. And then Me&U raised 30 million in December 22, led by Acorn Capital. It's raised in total 66 million. So 100 million and 66 million. So no, big amounts of money.
Decent amounts of money. So it's interesting, I think, and I guess from a VC's lens, it's interesting that two of those companies who both had sort of raised similar amount, again, according to the press, similar degree of gross revenue running through both businesses and GMV running through both businesses. It's interesting they decided to merge. So, what does that kind of, I guess, tell you, James, and what does that tell you about how you think the market, what the market really looks like?
What it tells me is that they've both hit a ceiling in international growth. And that I think is two reasons. One, the behavior in the US is just not the same as over here. So they don't like using cash because there's a tipping culture in the US, and it's very clear when you go there. In fact, I was struck by in New York the variety of clones of Mr. Yum and Me&U. Just all these terrible clones that existed that, didn't have payments integrated in any way. So I think that all that means to me is there's a huge education piece, which means they've got to play the long tail. I think it's smart for them to join up forces rather than cannibalize themselves. Having said that, I don't know if that would happen in the US. I think in the US, you probably would have had more aggressive, you may have seen investors be a bit more aggressive, but right now we're not in that market right now where they want to do crazy growth rounds like you saw with SoftBank back in the day. So as a result, I think it's smart. I think it's a bit worrying that they're not sort of growing very fast overseas, whereas in Australia they grew very fast. And what I wonder is, what does this company look like when it's mature? Does it ever penetrate the US? Does it really just end up in the UK and maybe a bit of EU? I really don't know. But I think it's somewhat smart that they did it. And I'd be really interested to see what the outcome is from an investment fund perspective once it's all done and dusted and they exit.
Do you think we'll see another similar deal like this, in the short term, mid-term, long term? It's actually kind of rare, I guess, to see M&A at that size from Australian startups. Not so much in the US, I guess, but in Australia, comparatively rare to see deals like that happen after they'd raised that amount of capital.
Yeah, it's a good question. We really are in our first generation of what I'd call growth technology companies in Australia where we've actually got a sizable cohort. There's probably about 30, 40 of them that have raised over north of 50 million and maybe 20 over 100 million in the last 5 years. And once you're at that scale, in theory, you should be buying up a lot of companies. So I guess what surprises me is we're not seeing a lot of M&A activity at the very, very small end. So I would have expected, for example, Canva to have bought way more competitors within Australia, just purely for acqui-hire reasons, and we're not seeing that at all. So I find that kind of intriguing. But at that mid-level, so Me&U and Mr. level, I think we will see more consolidation there. I don't think we'll necessarily see mergers, but I do think we'll see someone try and buy out more of their competitors. I guess the question is, do they have the cash flow and balance sheet to do that, or do they need to go raise external capital? And if you need to raise external capital, that's tough in this market to go and just do a buyout. But I think depending on the investors, there's definitely a strategy to play here to kind of go consolidate and buy people on the cheap in this market right now, knowing that in 5 years' time, if the market changes, you might end up with a really great global dominant player.
Well, again, interesting to see how those predictions all pan out.
That's right. Okay, great. We'll move on now to our next section, which is Roast My Deck. Great. I'm super excited for this deck, Hugh, for our next Roast My Deck. In particular, this company is called Outread. We have been following Outread for a little over, I think it's 8 months now, maybe close to a year. And we've seen the founder go through a few different iterations. And so that's why I wanted to sort of revisit their latest deck, which you have not seen. They literally emailed me this last night.
Great.
And very interested to get your view on this. It kind of touches on a bunch of the themes which we've been talking about beforehand. So are you ready to dive in?
Let's go.
Let's do it. Slide 1. Take it away, Hugh.
Okay. So, I mean, this doesn't really tell me what they do. I'm big about, like, start with what it is that they do, right? And this team is, AI-driven research, summaries of research. And it just, like, I get the piece of, like, humans are curious, it's nice, but, like, just tell me what you do. Start with what you do. And I think particularly with the world of, like, you're using AI is, obviously on the up and up at the moment. Like, stick it in there as early as you can. Make that really obvious, nice and early, would be my sort of feedback. Otherwise, nice enough, nice design, like the layout.
I would say brownie points on the fact that you show me the application straight away.
Yeah.
So obviously, I presume it's the app that they're screenshotting down there. That's nice. But yeah, for founders, I really don't like it when they use really iffy like statements like learn more, do more, be more. Like,
yeah, it's not a marketing website, it's a deck.
It's a deck, right? And you're not a big brand, no one knows who you are, and no one knows what you do. So be upfront, be direct, and I think that always comes across better from an investor lens. We'll jump to slide 2. So slide 2, team. Okay,
so I mean, I'm not sure I love the term AI visionaries. I think visionaries is a bit of one of those like words. Would have been nice if the photos were a bit more consistently formatted. They're kind of almost consistently formatted, but Dhruv in the middle looks like he's like 5'2", and the women look like they're 6 foot something. And that's just a cropping visual design piece, to be clear.
Yeah.
I mean, the logo's nice, sure. I'm not sure it necessarily really tells me that much. It doesn't tell me if it's that they're students at RMIT or they're clients or like AWS. Okay, did you work there? Did you say that you're using AWS?
They mean that they've worked there.
I mean, they haven't worked at South by Southwest, right? So, like,
maybe, yeah.
It's kind of a bit of a strange collection.
True.
The accolades piece, I don't know, like, I think this doesn't really help me very much. Like, saying that you've been sponsored to visit South by and an EO event in Cape Town, which was GLC last year, doesn't really say to me that, like, you can build stuff. Like, I think the best early stage slides show, like, hey, we're a team that can ship stuff. We can do things. And this one I'm not sure necessarily tells me this. It just sort of says, oh yes, look at me, I'm very smart. And all founders are very smart.
Yep.
And I think, really you want to, particularly if the company has, a real product in market, you want to really highlight the piece of like, hey, like, we've built stuff together before. Like, you want to showcase that piece of how the founders know each other, how they're well connected, how long you've been working together, all that kind of piece, I think really needs to be the broader focus than just a logo wall.
Yeah.
But again, that's a bit of a point of religion.
Yeah, I agree. I would recommend in this slide to say something that is sort of unique about your skills, what you've achieved.
Yeah.
Prove that you can ship and or have achieved something pretty cool. And I think
every AI deck has people saying we're amazing AI visionaries.
Well, yes. I don't know if they use that
right?
term AI visionaries.
No, they don't use the term, but the whole point is like they all have, like it's sort of like it's a, your startup's dead in the water if you're doing an AI startup and you have no idea about AI.
Sure.
Right? So it's kind of like,
sure.
It's almost taken as read that if you're doing an AI company, particularly if you've shipped something, that you at least have some clue.
Correct. What I would love to know is like, have you contributed to a paper? Did you work on a model?
Yeah.
Are you ex-deep mind?
What does this look like?
Yeah, exactly.
Like, there's and I think research is an interesting point where someone like, oh, okay, research is interesting. Research into ML, research is into, I don't know, like biomed, like, what does that, what does that look like? Because I think, again, the depth of experience you see out of someone who is an ML or, computer vision, as you say, James, or some sort of, researcher in that capacity is very different to particularly knowing, obviously what the company does from both the previous slide and sort of knowing a little bit about it. That's quite different to saying we understand the customer space, which is researchers.
Correct. All right, slide 3, moving on. Research papers drive innovation is the title here.
I mean, that's not one you should ever say to VCs, because VCs would say researchers don't drive any innovation at all. But anyway, I guess, deep tech. I'll allow deep tech as the exception to that. I think the paywall thing here is a bad example to use, because obviously, you've got Sci-Hub and the whole process of Sci-Hub and what that means. I think you can say due to, challenges accessing, again, I think if you're a researcher at a university, it's effort to access often more so than necessarily it's not licensed. Technical jargon, I think, is an interesting one. Again, probably the same piece of saying, okay, sure, I can understand that from for example, a student's lens, but if I was a 25-year biotech researcher reading biotech papers, I live in technical jargon. I don't need someone to strip out the technical jargon for me. In fact, I want the technical jargon, because the reason that jargon exists is it allows me to read and write and talk about things in shorthand or some degree of greater detail than I'd otherwise be able to do. So it's an interesting question, and I don't know. Like, I think this stifles innovation. I'm kind of like square bracket citation needed Wikipedia style there. I'm not sure innovation is necessarily stifled because research papers drive them. I'd more say it's like there's a very challenging signal to noise ratio going on.
Yeah, correct. I don't think the right angle here is I don't think the right key point takeaway here is to say that we've got innovation stifled. I think the interesting question for me is there a new market for people that want to follow the latest research papers? And is that market for some reason huge? That we don't know about, because that's an interesting insight that I would love to understand more.
I'd nearly say like it's sort of that piece of, and it's positioning piece and things like that. And I appreciate, again, it's a point of religion, but it's sort of like you look at all of those tools like what's the book summary one? Blinkist.
Yep.
You look at all those tools like Blinkist, and the whole point of them is to say like, hey, like, we unlock the 80th percentile of the knowledge in 5% of the time. And you could look at that in the success of saying, hey, like this is done for like nonfiction, and nonfiction summaries and things like that have been around forever. Why aren't there good summaries of research papers?
Correct.
I think that's actually in some ways a bit of a more robust argument in saying, hey, look, like this is always, whether it's even to the point of, beyond AI, like, there's like Cliff Notes and stuff like that, all of those little study guides and stuff that are summaries of knowledge and nonfiction. And, then we've got technical approaches to it. But like we haven't seen that in research paper world, and obviously the life cycle of textbooks and everything else is a long-term life cycle, so it's very hard for people to do it. So I think that for me, I think is actually a stronger argument or pitch than sort of papers are stuck behind paywalls.
Yep, I agree. Okay, we'll move on to the next slide.
Okay, so more papers. Yeah, I mean this just says signal and noise. Sure.
I'm not sure this is needed.
Yeah.
I'll move on to the next slide. So solution. Yeah, look.
Okay, so this is what we find. Now we're talking about what we actually do. Yeah. So I like that.
Yeah. Yeah, it's slide 5 though. It's a bit far down for me.
It's a bit late. Yeah, I agree. This could almost be like. Can you hear that?
Yeah, I can. Did you just start playing music?
What is going? I think Harry is playing something on his. I don't even know how those things are plugged in.
You could just, can't you just mute it?
Where's its off button? Oh, now I've just got the subwoofer. There we go. Okay.
What a collab. Nothing like an interruption.
Okay.
The solution.
I've never heard those speakers making noise.
There you go.
Anyway, I would really like to see this, to start again. I'd really like to see this slide, almost the first slide, right? This is kind of the piece of where, like there's a question whether you start with the vision, but I think the vision was a bit weak.
Yep.
Whereas this is a much more clear piece of like, this is what we do. AI-enabled research and insight discovery platform. I like that. Making it accessible, understandable, like that. I think that's a nice piece. I'm not sure everyday people is the initial market. But, again, that's a, point of religion a little bit. But, I quite like this. Nice and simple.
Yeah, I don't mind it. I agree on the everyday people part. When anyone says everyday people, or like, for consumers, I mean, so you don't know who your core customer is. That's my general view on that. All right, moving on to slide 6. Find and read cutting edge summaries. So I'll jump in here.
This looks like website copy.
Yeah, I mean, I would jump in here to say you could almost bring this up a lot forward to like slide 2 or 3 just to say what you do.
Yeah.
But I'm not too sure. Again, it's kind of a bit fluffy, right? Accelerating speed to insight by 75%. Why do I want to do that? Like, who do I really want to like? It depends on who this is for. So I'm not too sure if I understand the problem solution fit in terms of who the customer is here yet.
Yeah, I agree. And again, it reads a bit more like web copy than it does really anything else. But I like the fact they've showcased the product again.
Yeah.
I like the fact that they've consistently showcased some degree of product through the deck.
Yeah. Okay, slide 7.
Okay, so curation now. The ex-researcher in the literal researcher, not the AI researcher to be clear, in me says, curation, find articles that rank the highest. I'm like, how are you ranking the articles? That's a very complicated scientific problem that there's not really a solution to yet. But anyway, I mean, this kind of says, this doesn't really help me that much. I mean, personalization is an interesting point, I guess, here. Like the 1 and 2, I'm like, yeah, you've already said you do AI-driven summaries, right? Which is that. And point 3, I'm kind of like, okay, that's an interesting question of like, how should these things be personalized? Is that something that they're doing today, or is that part of the future vision? I don't know. But I think that is an interesting, that's an interesting kind of, I guess, lens on top of it beyond just saying, oh yes, we essentially curate and then run it through ChatGPT.
Yeah. I guess, are they trying to say the proprietary algorithm does these things? I guess they are saying that, right?
Well, yeah, and I think I always, when people say algorithm, I'm always like sort of citation needed, because is it an algorithm? Is it a workflow?
Yeah.
Is it a prompt engineering piece?
Yeah.
And usually, certainly our experience, I think to date, James, has been that the proprietary stuff is essentially workflow and or prompt engineering, more so than algorithm.
Correct, yeah. I mean, if they've invented a new ranking algorithm for papers, that'd be great to know, for example. Which it does not come through in this situation. Slide 8. All right.
I actually like this slide.
I do too.
I like this slide because I think it's a really strong illustration of the product.
It's the strongest slide to date, I think.
Like we're 8 slides in, and I reckon about 4 of them have just been about the product.
Yep.
Which is a bit much, I think. Possibly 5 of them been about the product.
Yeah.
But I think it's a strong slide. Like I think this in some ways is stronger than the previous slide in showing what you actually do.
Yeah, I agree. It's quite interesting, actually. I have a lot more questions that now come from this, and I think if a slide creates a lot of questions for the investors, I think that's a positive outcome.
That's actually a very good lens for people to ask when they're reading through these decks, is like, will this slide generate questions? Because you want to obviously answer stuff, but you want people to be excited and ask questions as a result of it.
Correct.
More so than just kind of, have people read through and be like, yeah, no shit.
Exactly,
no shit.
Yep. Okay, traction, slide 9.
I mean, look, whether or not you put traction at the start or the end, I don't mind. 200 customers, cool. I'm kind of like, okay, like,
are you impressed? Are you impressed by this, or are you not impressed by that?
I mean, 200 customers at 2K monthly revenue doesn't sound like they're charging very much for something that, either it's not that valuable to people or they're sort of only going to the consumer piece and, it's $10 a month and people spend $10 a month on lots of things. And again, like, that's the market for Blinkist and things like that is, 10, 20 bucks a month kind of space. Again, I love the fact they've got revenue. I love that. I love that they've got customers. I love that too. I think the logos thing down the bottom used by execs from. I'm like, okay, so you're saying to me the customers are execs? Okay, that's interesting, right? But like, you could narrow down to me a little bit what kind of execs really look like. Partnerships with, I fucking hate that section. Like,
yeah, I just don't think it matters.
Correct. I don't think it matters. B2B customers pipeline, again, interesting.
Yeah,
okay, interesting. Like, what does this look like at a broader licensing level? That is an interesting question.
Yeah, I mean, it's kind of intriguing. I start thinking, would KPMG pay for all their consultants to have this because this is a great way to get research on the latest, management consulting theory or whatever it might be that they can then sell into clients? Don't know.
Yeah, I mean that also asked me. I mean, I asked this question, at a point here and to a degree earlier in the deck as well. Is like, the curious question I'm still wondering in my mind here is how are they navigating the copyright challenges, knowing the complexities of how Elsevier and all of Elsevier and the textbook publishers and things, the paper publishing conglomerates protect their revenue source and everything else.
That's right. Yeah.
How well they're going to be able to navigate that. And I'm sure Blinkist has obviously navigated that in terms of book summaries, but how do you actually ensure that there is that right piece, because I would hazard a guess that they're doing the approach that I would be doing if I was a startup, which is quietly ignore that until I get sued. But hopefully at some point they actually have gotten legal advice before they get sued, knowing that they're going to need some advice.
Yeah, definitely asterisk there. Okay, our preliminary market strategy prioritizes professionals within the consult. Okay, so they are selling to consultants.
This is like saying this is my beachhead, right? We like you can just say it's a beachhead market.
Yeah.
Preliminary market strategy prioritize. That's too many words.
It is
right?
way too many words.
Our beachhead market is professional consultants, right?
You could also just say our go-to-market is consultants.
Yeah. Our first customers will be management consultants.
Yeah. And by the way, if it is that, I feel like everything else hasn't really been explaining towards this point. Like, it's been very general, everyday users, all this type of stuff. I like to see a deck. If your focus is this customer, I want to know why this customer has this problem, right? And why it is so severe for them. And you got to make me understand why it's the severity of it for consultants.
Well, I think why you understand this customer.
Yeah.
And I presume that this is because, from the PwC logo back up in the team slide, I presume this is because they were PwC consultants. Yeah. But we don't know that.
Don't know that. No.
I think when I look at the TAM, I mean, TAM calculation kind of things, I'm like 600 million. Yeah, that's probably is what they spend. But like, when you talk about research, like the money that consultants spend on research, that's not necessarily research in the sense of papers research. That's often in the sense of like, paying market researchers or GLG or someone like that to go out and interview executives to understand markets. Like, that's kind of a totally different spend category to research in terms of like academic papers. And I know that. And so if you said, I can't believe for a second that KPMG spends $600 million a year in licensing academic papers.
Yeah, I agree with that.
Right? Absolutely not. We can categorically say that's not the case.
Okay, market size slide.
I mean,
58 billion?
This one I just go, sure, great, you come up with a big-ish number. 58 billion doesn't seem like that big given that there's no real qualification as to how you got to that number. I think the same thing with the previous slide, I rather see these things talking about how you've come to that number and kind of the different components that you have that make up that number than necessarily care about purely what the number is.
Yeah, I agree with that part. Yeah, I kind of go 58 billion. I raise my eyebrows and I kind of go, where did this come from? Magic air, I think, I suspect.
Is this SOM? I assume this is SOM.
I think it's TAM is my guess, but like the research summaries part, I'm like, that sounds SOM. But then I'm like, and for those that you don't know, SOM, it's serviceable obtainable market. So that's what that means.
How many people they think that actually win compared to just the total market?
Correct. And 58 billion is a pretty big SOM. That means your TAM's got to be even bigger than that. Yeah. And that's what I'm like,
you're going to somehow have 99% of the the market, which I don't think this is. I mean, I already asked the question. I think I already asked the question in my head here of like, is this a winner-take-all market? And I'm not sure the answer is yes.
Yeah. Yeah. Okay.
And that just changes. That's not a problem. It just changes the dynamics of how the company has to compete.
Yeah.
Okay, so business model, $30 a month. Now that then, so this immediately makes me go, $30 a month. Okay, but then you've just said you have $2,000 in monthly revenue from 200 customers, which is about $10 a month. So something in the math there is not right. So let it be known that I immediately did some math in my head there and was like, where does that come from?
You are famous for detail in these things, so I'm not surprised. But yeah, if you give us numbers, we'll do the calculations and try and work it out. Yeah.
Well, and just like, I think that insofar as it's like, you want to say in the previous slide, oh, this is at the beta price of $10 a month.
Yeah, that's probably what's
blah.
happened.
Sure, that's fine, right? But like, I think you've got to say here, if you're saying we're charging $30 a month and you're actually charging 10, then really you're charging 10 with the intent to charge 30.
Yeah. But the problem I have here is like, you just said it's consultants. I'm not too sure you should be putting B2C as your main business model here.
Yeah.
Because then you're really not selling to B2C. You're telling people that using a corporate card. And so it's B2B. And so I think it's just a bit confused. All right. This is what I was waiting for. How on earth
competition
are you different?
slide.
Yeah.
Oh, GLG, look at that. Okay. So, I would firstly say they're not competing with GLG. Right?
No.
GLG goes out to go, like, yes, they do desk research as well, but like GLG goes out to go and like pay people a crap ton of money to interview them on a very, very niche subject and then write you a report about what people say. Yeah. This is like saying, ChatGPT is competing with market research firms. They're not. No. Of course they're not.
No.
Like you're not going to be able to do market research with ChatGPT. Like, just doesn't, you can use generic questions, but like it's not the business of ChatGPT.
No.
So the GLG example, I'm a bit like, not sure I really buy that one. Beyond, yes, okay, there's some desk research that they might do, but also like desk research is what you pay consultants to do. So
yeah, and you pay consultants for kind of like the other. What are the insights that are not public? What are the things? Yeah. What are the things about the revenues of these
poorest
big firms?
Chinese walls?
Yeah, exactly. What are they? Well, I guess it's not PwC in this case, or maybe tax advice. But
let's not get into that one.
Scholar.
Anyway, so ignoring that column.
Yeah. Do you know Scholar?
Interesting. I've never heard of Scholar.
Yeah, I've never heard of
give me
them
some more about what they are.
Yeah, I don't know what they are.
I find it interesting that they're comparing Scholarly to ChatGPT as if they're feature equivalent, because they're obviously not, right? Because ChatGPT is very, very Swiss Army knife, could do anything, has its own limitations, obviously. And Scholarly, I assume, is more directly competitive to Outread, but based on their ticks and crosses table, they do the same thing. And I'm like, not sure about that.
Yeah, I agree. I agree with that part. The audio part is also intriguing for me. Like, I kind of wanted to know a little bit more about why that's a moat, because what I'm trying to work out here is there a moat, or are you just a wrapper around ChatGPT? And I think if you're just a wrapper, that's fine, but where does your moat come in over time? And the other thing to keep in mind is ChatGPT is getting personalization. It's going to be switched on soonish, rumors. And
well, of course.
And it just makes a lot of sense.
Same thing with audio.
Yeah, exactly.
Well, audio's already come out as well.
Yeah.
So
yeah, exactly.
But again, both of those things were safe to assume that we're going to be on the roadmap of ChatGPT / OpenAI sooner or later.
Exactly.
So,
exactly.
Yeah.
So how are we different? Here we go.
See, now...
really?
I don't know if I buy this.
I don't buy this.
But this is a point of religion, I guess. So, we can't say for certain that we're right and this slide is wrong. But I'm not sure that I agree that AI tools aim to replace intelligence.
No.
I think particularly in the professional services sector, I think they'll improve efficiency. They'll, shuffle away some of the work that is done and how it's allocated and how it's actually delivered. But I don't think it's going to replace it.
No, Sam said on stage, we saw him talk on the panel. We saw him on the talk. He literally said he doesn't think the valuable use case is replacing jobs. He thinks he's worried about jobs, but yeah, he thinks
he does. Yeah, his incentives are different, but
sure.
Yeah, and I sort of also go, which would you choose? What, enhancing intelligence or replacing it? But you're still using AI, right? You're an AI tool.
Also, why Einstein?
Yeah, I saw this be a weird slide.
All right, next slide.
Next slide.
Okay, ask. I love an ask. 500k pre-seed. Nothing crazy. That's good.
Great.
Nothing crazy.
Solid, clear.
Yeah.
Don't try and put a random valuation in front of me that you have come up with just because you saw some competitor in the news.
Yeah.
I like the pie chart. Everyone loves the pie chart, use of funds.
Surprisingly, very few people use a pie chart. If you're listening and you're a founder, put a use of fund pie chart.
Nice and easy.
Just show us the general makeup of what you're spending.
We only care about the buckets. We don't really care about, and the percentages. We don't care about the dollar values.
No.
Like the ones that put the dollar value, not too much work. OPEX 20%. Yeah, okay, sure. Marketing and R&D, half and half. That seems like a lot. Typically we would see, startups spending more on that R&D development side.
Yeah.
And the early marketing and sales is a little bit more, sort of founder driven and everything else than necessarily spending, 40% of your raise on marketing at a 500K raise. Correct. So I'd say the balance seems a little bit weird. So and in that context, I would say, okay, what how have you sort of budgeted out that 40%? What does that look like? Is that because there's a couple of key conferences they're attending that are actually quite expensive, and so that's where it's coming from, to really understand that piece of how they're thinking about what this use of funds pie chart ends up looking like.
Yeah,
but a good slide, nice and clear.
Yeah, I agree. It's nice and clear. I would say for a lot of pre-seed companies, I expect you to be putting most of your money into R&D, so mostly your product engineering team, right? And I think when you do have nearly half of it going into marketing, I want to know why you're so marketing.
The product's going to be very much ready for market.
Yeah.
If you're putting half of your raise into marketing, the product's going to be bloody ready for market.
Yeah. And I just don't think that's the case in this situation. But maybe I'll be wrong.
Maybe it is. And they've got early customers. They've got early revenue. So. Yeah.
Okay, and I think that's it, right? That's the last slide. Where connected science is
society. Yeah, I don't know if I love this as the vision slide.
No. Well, a pro tip though, if you are going to throw a lot of like marketing phraseology and taglines, have one tagline, make sure it hits, and repeat it multiple times. Like just, and if it is like the vision tag, or it's like we want to be at 1 million customers in 1 year, hypothetically, something like that, say that 3 or 4 times, because that's the thing you want the investors to take away with. I think this is a bit too broad. I think this is a little bit too iffy and not that interesting tagline for me. But yeah. All right. Well, that's Outread. As I said, we've been following them for a while, so I'm going to do another update call that I believe next week, which I'm excited for. But Hugh, what would you rank this deck out of 10?
Oh, I don't know. I don't. What do I normally rate decks?
I don't know. You've been pretty generous.
I think this was probably typical. Yeah. This is typical for what we probably see.
Yeah.
And I think again, as I always say about these things, a big part of the job of a VC is being able to tell the difference between a really great business that just isn't pitched that well and a really awful business that is pitched really well, right? And in some ways, you really want to avoid bucket 2. There's nothing worse than awful businesses that are pitched really well.
Yep.
And so I think, the fact that I'm saying it's not a great deck doesn't mean it's not a great company, because I think it's quite common, particularly in the early stage, for these things to look like this and kind of be a bit confusing and not really maybe understand how VCs are, reading and thinking about things as you go through a deck. And that's why we're doing these calls.
That's right. Yeah. So hopefully that was helpful for the founders and for everyone else on the call. Thanks very much to Outread for sharing us your deck, and we're looking forward to chatting with you soon.
Awesome.
All right.
Thanks, team.
So moving on from a roast by deck, I've decided that for this episode, we will not be going through a founder question. We will, in fact, be pushing that to the next episode, which is good. We're going to follow up with very quickly because it's been a few months since we published the last podcast episode. So in the next episode, we will be talking about how to deal with valuation differences between Australia and the USA as a founder. I think it's a really important topic. We have lots to say. I can see your notes here, Hugh. You have lots to say as well. So it will be lots of...
There are many things I can say about this topic.
So it will be a juicy topic. So make sure to tune in for the next one. As for then, thank you for listening to this episode of Galileo Ventures podcast with myself and Hugh. Please subscribe on YouTube, Apple, or Spotify, and give us a review so that others can find us. Till next time, thanks very much.